Tonight with Lisa Grant.
Welcome back. And waiting on the phone for me, I have Jonathan Davis. And for anyone who hasn't heard Jonathan on the show before, he's a regular contributor and he knows about all things money. And that's a layman's way of putting it, isn't it, Jonathan?
Well, it is a layman's way of putting it. I hope I can live up to that. I don't think I
can. Now, he's a money manager and he also runs his own business with regards to advising people on stocks and shares and moving money and various other aspects. And, of course, he is an economist as well. And just like me, loves to pass comment on pretty much anything when it comes to the financial world. And, Jonathan, this headline that we talked about yesterday and that I've told everyone about today, quite honestly, did not make any sense to me whatsoever. Foreigners dumped $74 billion in treasuries in 6 consecutive weeks, the biggest sequential outflow in history. Why don't people write headlines in straight English?
It was that English.
Yeah, but it's not, is it?
Clearly, it's written for the sophisticated reader. Allow me to explain it for some of your listeners who may not be up on these things. First of all, what are treasuries? They are, in effect, loans to the United States government. Your listeners may know of UK gilts. In other words, loans to the UK government. It's how governments finance their activities. They borrow money, and they borrow money by in effect selling their gilts or selling their treasuries to investors. So, for example, they may say, right, we want to borrow $10 billion, and we're offering it to the whoever who's in the market for, say, 4% per annum interest over the next 30 years, and in 30 years' time we'll give you the $10 billion back.
Right.
And that's how lenders, be it countries or, say, international pension funds or international banks, that's how they lend to governments by buying the government debt.
Right.
So what we're hearing from this headline is that there's been the biggest sell of debt by the lenders. We don't actually know, as it happens, who has sold this debt. The biggest sale of this debt in history, $74 billion in 6 weeks. In essence, what they're saying is that the lenders, the people who have effectively invested in the United States, might be starting to get a little bit nervous as to whether or not they're going to get their money back.
I would have thought so, yes.
Indeed, and you know, was it in August, I think it was, that the United States debt was downgraded from AAA to AA minus or AA plus, I can't remember exactly, for the first time in the United States history. Compare this to what's happening in Europe right now. Maybe this will help people understand. Greece is in the news every day, of course. It owes all this money, and the taxpayers clearly cannot afford to pay the debt back. And they're talking about the banks, the lenders, taking a haircut. Now, what does that actually mean? Well, it means that the banks currently in their balance sheets have, for simplicity, 100 billion euros of debt that they've loaned to the Greek government. Mm-hmm. The haircut means that, like that, they could find that they lose 50% of the value of that debt. In other words, they're expecting in X year's time to get 100 billion euros back, but given what decisions the European Central Bank and Angela Merkel and etc. make, they could find that they're not going to get 100 billion euros, they're going to get 50 billion euros.
Yes.
And when a lender, when a lender sells the debt on to someone else, they will be selling it at reduced value because they think it's better to take a short-term loss than a long-term bigger loss.
I'm curious, how on earth did the idea of selling on debt actually come about? Because as far as I'm aware, let me just bring this down to, you know, sort of really basic terms. You lend somebody some money, then you owe that person the money, and that agreement is between person A and person B. How on earth did a C person come into all this? Surely that just makes things more complicated.
Well, you ask a perfectly sensible question. The issue is that selling on debt has been around for decades. It's often called securitization. In other words, for example, I believe because of the loan that I've made to the US government, I'm going to get, $40 million a year interest over the next 10 years. And then in 10 years' time, I'm going to get the loan back of, say, $1 billion. But I'm now thinking, well, do you know what? I'm not sure if I'm going to get my $1 billion in 10 years' time, so I'm going to sell that on to someone else. They will give me, for simplicity, $900 million today. I take a bit of a loss, but better that than I might find I'm landed with a big loss in the future. And think back to Northern Rock, 2007, the first bank in 140 years in the United Kingdom which went bust, that had a bank run. Their whole business model was based upon selling on the mortgages that they had created and loaned on into the city. And that is the root problem of our global finance, because there has been sell on of debt for decades, and that's why these banks have been able to get away with metaphorical murder, because they haven't been holding the baby. They've been passing it on to someone else, and eventually that someone else goes bankrupt.
Yeah, you've just hit the nail on the head of what my next question was going to be. The whole passing the buck thing seems to be a trend in every walk of life. But when you have such big institutions like financials and banks, etc., doing this kind of thing, it almost reminds me of school when you used to play Chinese whispers. Do you understand what I mean? It's like, I've got, and pass the parcel. I've got this secret, but I'm going to pass it on to you. But you can guarantee when I pass it on to you, it's going to get a bit more warped. And the real story is going to start to disappear. But don't worry, it'll be your problem, not mine from now on. It's ridiculous.
Well, it is ridiculous, and it's the root problem in global finance. Because of selling on of debt, banks have been able to create new debt. Governments have happily taken on the debt, and that's the reason why we have now got an absolutely Himalayan level of debt in global finance, in Europe, in Greece, in Spain. Just look at the cranes.
74 billion. I can't even begin to think what that looks like in real terms.
Well, that's your shoe allowance for the next couple of months, isn't it?
Thank you very much for that.
It is an awful lot of money, of course it is, but please, we need to put it into perspective. The amount of debt that the US government holds is $3,000 billion that the Chinese, the Japanese, and other wealth funds have loaned to the United States. So actually 74 billion, as huge a size as it is actually a drop in the ocean. However, if this is the start of what we call a bear market, a falling market in US government debt, bearing in mind that there's been a bull market, rising debt for 30 or 40 years, if this is the start of a bear market, then I tell you, it's good night Vienna for the world economy, because when the US stops being able to pay its bills because no one will buy its debt, well, join the dots. Nothing's going to happen in the global economy, because the US will have double pneumonia.
Let me just read you a quote from Alex Jones in the States, saying that we were proposed a similar theory, or a simpler theory about all this. The dreaded D-Day in which foreign official and private investors finally start offloading their $2.7 trillion
Which is the 3,000 billion I was just talking about.
Yeah. In treasuries, with impunity, although not with an element of surprise, China has made it abundantly clear that will sell its treasury holdings. The only question is when. If someone as huge as China does it, is that going to cause an even bigger tsunami of problems?
The answer to your question is yes, but the tsunami just keeps building and building. We ain't seen nothing yet, to coin a phrase. China has financed U.S. economic activity for the last 20 years by lending money to the United States at very low rates of interest. The U.S. has been able to do what it wants to do. It's funded social programs, it's funded crony capitalism, and so on. As when China stops buying U.S. debt, in other words, lending to the U.S. government, or even worse, when it starts selling debt, well, tsunami isn't the word. It's going to be the collision of a world colliding into planet Earth. It's going to be that big in global economics. And the crazy thing is, people need to realize it is a clear and present danger.
Absolutely.
It's not pie in the sky. We're not exaggerating. The global finance is on the edge of a huge precipice as we speak.
And of course, there are millions of people now marching around the world, basically saying exactly that. And you'd hope people would start to listen. I've been saying this for weeks, but it still seems to be going on. Okay, let's move our attention now to the UK and the fact that it's been announced in the last, it's 40 minutes, hour or so, that inflation is up to its highest mark in 3 years. What does that mean? What does that mean for the UK, and what does it mean for Europe?
Yeah, a retail price index, 5.6%. Consumer price index, which is this government-created nonsense, 5.2%.
Okay, I was just going to say to you, just explain what those two indexes actually are.
Yeah. Retail prices is what people pay for goods and services in the shops and in the hairdressers from a basket of goods and services. And consumer price index is basically what the government decides is to go into it. It's a stuff of nonsense. In reality, it means that people are paying significantly more than a year ago for their goods and services that they've always purchased, and yet, of course, their incomes, whether they be savings interest or earned income, are not rising nearly as fast as the rate of inflation. Unless, of course, you're a banker, when, of course, the taxpayer has given these guys literally trillions of pounds.
Oh, no. I'm laughing because I knew what you were going to say, yeah.
And these guys have taken home their vast bonuses, and who's paying for it? The taxpayer's paying for it. What does it mean for the UK? It means that the UK as a whole will have less to spend on things and services, which means undoubtedly we're going to have higher unemployment. In other words, we're in a vicious spiral down. And yet, this inflation rate that was announced is in relation to September. In other words, before the recent announcement of more money printing, the 75 billion quantitative easing that many of your listeners will have heard about. And all that will do is further deplete the value of sterling, which will further increase our import costs, which will further increase the cost of living and put us in an even further vicious spiral down. When are these guys going to get it that the solution is not more inflation, the solution is more savings interest and lower cost of living? That's the way to get the economy moving.
When it comes to your saying about higher imports prices and that kind of thing, is that going to put the European sector and also, in fact, the rest of the world off actually dealing with England? Because quite honestly, if it puts prices up so much, aren't people going to feel nervous that they're not going to be able to get paid? Or is that too simplistic?
I don't know about simplistic. I mean, no. I mean, we will still be buying from abroad. We'll be buying cars. We'll be buying computers. We'll even be importing a lot of our food and certainly our fuel. It's just that the end consumers and the businesses that use these items and these services will be paying more for it. Therefore, in due course, it stands to reason we'll buy less of it.
Yeah.
So, because we won't have the money, we'll be spending much more of our incomes and our wealth on providing for our current levels of needs. And when there's less stuff being sold in the economy, as I say, it puts yourself into a vicious downward spiral. So less stuff, higher prices means less stuff, means higher unemployment, which means a worse and worse and worse economy. The Euro land has got its own problems with its currency. I've said before on your programme, the euro is toast because European banking is toast. They're even talking about France now, clearly one of the top two countries in the Eurozone. They're talking about France being downgraded, just like the United States, just like Greece, maybe not to the extent of Greece yet, but France being downgraded means that France will borrow more expensively on the world markets, which means that they will have to again spend more interest servicing this debt, and they will have more and more difficulty in paying off the debt that they're going to try and pay off for Greece and then Ireland and Portugal and so on. The whole euro system is toast.
Yep.
Therefore, the euro is toast. Whether or not it's going to go down quicker against sterling is a moot point, because the reality is both currencies are toast. Governments are deliberately taking action to reduce the value of those currencies, which only helps governments and bankers. It does not help the people.
On that note, Jonathan, we have run out of time. Thank you very much, as ever. Always fabulous talking to you.
Pleasure.
Just one more comment before you go. And this was something that we talked about yesterday. We won't name the media channel concerned, and you'll know what I mean. You'll know what I mean when I say that. Protesters being referred to as anti-capitalists.
Yep. Yeah, the Occupy Wall Street, Occupy London Stock Exchange, and this Occupy movement right across Europe and indeed in other parts of the world, as you say, they're being called anti-capitalists. And I'm sure your listeners have heard that phrase a dozen times already. Now, I just ask them this question: how can bailing out failed banks be capitalism?
Yeah.
Because capitalism is letting failed businesses go bust so that sound businesses can grow. No, these protesters are pro-capitalism, they're anti-corporatism, socialism, fascism, they are pro-capitalism.
So it's amazing to me that certain media stations, which shall remain nameless, keep banding around the word anti-capitalism, although the comment has been made that up until I think about possibly a day ago, when a manifesto by the Occupied Wall Street protesters was actually put on their website, they've actually got a manifesto, but up until then, no real degree of clarity about what people wanted had been written down, and obviously these protests have been going on for a month now.
Agreed, and I've been looking carefully into what the Occupy Wall Street people are seeking, and the reality is that they've lost their way. They're being taken over by the trades unions. They are as vested interest now as the bankers, but asking for different things. They want free college education. They want more spending in the public sector. Actually, they've lost their way, and they've moved. They were definitely pro-capitalist. Some of them still are, but they're now as vested interest as the bankers in just slightly different ways. The original ethos is a good idea, But no, it's been tainted with whom they're associated now.
Well, I'm sure we will see it trundle on for a lot longer and watch it unwind in front of our eyes. Jonathan, as ever, absolute pleasure to talk to you. Thank you very much for your time tonight.
All the best. Bye-bye, Lisa.
Bye.